Now, you sent the team something put out by Warren Buffett 22 years ago. There was some buzz a few weeks ago about a social media post that seemed to indicate Buffett endorsing Trump's tariff policy. Then Berkshire Hathaway pushed back pretty strongly against that, and Buffett, if anything, has been throwing some shade on it. But you found something from 2003. Well, go ahead and explain it, David.
Well, and first off, so last Saturday at the annual shareholder meeting, just before he announced his retirement, which we'll talk about, it looks like a little bit later, he talked about, tariffs are terrible again. He put the comment out there, this is horrible. Backing away. So I just happened to pull up an article that he authored, not just a quote. He wrote the entire article and talked about, we've got to stop these trade imbalances. America needs to get itself set up correctly and stop all these trade deficits. And
this was in Fortune magazine. Let me just read the headline and then turn you loose. America's growing trade deficit is selling the nation out from under us. Here's a way to fix the problem, and we need to do it now.
And it's very simple. When we buy a good from another country, we send our dollars to that country. Therefore, the wealth of that dollar, the profit of the things it can do economically has left our borders forever, right? And so these trade imbalances cannot go on indefinitely. Now, we won't have time to get into a complete economics class here, but you have to understand trade imbalances were how we fueled our economy. We are a consumption-based economy. Since we went off the gold standard, the only way to kind of keep things alive was to make sure we imported a lot of cheap goods to keep Americans happy. In other words, drive the cost of goods down, which we have, like electronics. I mean, you can buy a flat screen TV for such cheap dollars from 25, 30 years ago, right? But the problem is it comes at a cost. You have to pay that piper sooner or later. And Buffett was completely on target here telling you about this. And in the article, we don't have time, we'll post it in the comments if you want to read it. But he had Squanderville and Thriftville and just talking about, listen, You've got to be smart in what you're doing. Now, the reason Berkshire is having him back away is the investment portfolio of Berkshire Hathaway is very different today in 2025 than it was 22 years ago when he wrote this article. He owned mainly companies that were U.S. based and producing goods and services in the U.S. So he did not like the trade imbalances.
Back in 2003.
Yes. Lo and behold, today, what's the largest holding? It's Apple. And where are their products manufactured?
China or India. But
and they're trying to move it from China to India. So this is directly affecting the value of his portfolio, right? And Coca-Cola, which is one of his top 5 holdings as well, they sell more of their products outside the U.S. than they do inside the U.S. That was not the case 22 years ago. Again, listen, Warren Buffett's amazing. The greatest single investor of our lifetime and probably not going to be repeated in our lifetime with his returns, et cetera. But he is protecting his investment, which is what he's always done. That's why he likes monopolies. He likes companies with pricing power, like Apple, like Coca-Cola, because they have a unique brand that you can increase prices even in tough times, and you're going to benefit. But he tells it like it is, but he's only going to say it what's convenient for his current setup and his shareholders, which that's his fiduciary duty, frankly.